Hi, amazing things are happening in the Mortgage Minute. That's why I came back on the air to talk to you about it. First of all, today, which is the 28th of October, they have extended the investment tax credit of up to $8,000 for first-time homebuyers until April 2010, and they've also included other people. I do not have the details on that, but that's something that you should note for yourself if you're interested in buying a house. Second, come Monday, we're into the month of November, and that will be 1 year that we have seen mortgage rates plummet into the 4% range. Can you imagine that? It's been there basically for an entire year now. How much longer do you think it can be there? Now, if you think it can last a lot longer and you don't act right now and you miss it, you have only yourself to blame. If you're not that convinced, then maybe now is the time to act, because the right move, whether it's shortening your amortization, whether it's pulling cash out of your house to fix up your house or set up some reserves, whether it's lengthening your amortization to make life a little bit easier for you, can be happening right this moment with incredible rates and get you onto the road to financial freedom. And that's a road that everybody wants to get on. Now, let me give you some reasons why I think you should move, because I don't think everybody is completely comprised of everything that's going on in the mortgage industry. Number one, come December 15th, Fannie Mae and Freddie Mac have put in new ratios that they will allow only up to 45% of your debt-to-income ratio to qualify for a loan. And they're going to do this through their automated underwriting system, where every loan that goes to Fannie or Freddie is run through in its inception. Now, why does that matter? Well, because prior to that, we've been able to get loans approved that have a 60, 61, 62% debt-to-income ratio. So we made it a lot easier for people to qualify. I don't know why they're making it tougher. It's not, in my opinion, the time to be doing it, but they are doing it. They're making it tougher. They're lowering it to 45%. What that means is, if you have $10,000 in gross income a month, you can only spend $4,500 on your mortgage payments, your car payments, your credit card payments, your bank loans, your student loans. And that's pretty tough to do for most people today. Not everybody, but why let that happen? It's going to take place in a month and a half. You still have time to go under the old rules. Secondly, the Federal Reserve has been buying mortgage-backed securities to keep these rates low. Their goal was to buy $1.25 trillion of these notes, bills, and bonds. $1.25 trillion worth of these. They estimate that that will be done by March of 2010. When that's done, there's not going to be anybody in there buying the mortgage-backed securities to keep the rates low. So we know on the outside that maybe March is the last month that we can basically hope that rates stay low. Number three, we have unemployment problems in this country, and that means people cannot qualify for loans. Those who are employed now should feel very good about it and should take advantage of it, because I'm hearing economists talk about a recovery, but a recovery that's going to continue to lose jobs because of the productivity that the American worker has now developed. That is not good news for people who are maybe tentative in their jobs or just hanging on by a thread or unemployed, because it means you're not going to get the job you were hoping for. So if you're in the good position now, you should take advantage of it because you have something to qualify with. Last but not least, we had a loan called the option arm that a lot of you know as the 1% interest rate that is no longer in existence. But it was out there 3 years, 4 years, 5 years ago, and it's going to be resetting. And a lot of people will not be able to afford those mortgages, and so foreclosures are going to start picking up, sadly, again. If a foreclosure happens in your neighborhood, it basically robs you of your equity for at least 6 months. So if you've got the equity now, if you've got the earnings now, if you know what you want to do, if you love these low rates, now's the time to take advantage of it. Basically, all of our rates are in the 4% range without points. So why not take advantage of those things? We can be reached by going to mortgageminuteguy.com. Until we talk again, I'm Roger Schlesinger, the Mortgage Minute Guy.